We are kicking off the week with massive news. Xbox co-founder Seamus Blackley has made a huge return, recently invited to visit Team Xbox at Microsoft headquarters. This visit comes right after Blackley voiced serious concerns about the potential sunsetting of the Xbox brand, and he brought some serious advice for Asha Sharma, including lessons from industry legends like Reggie Fils-Aimé and Phil Harrison. Find out what this high-level meeting means for the future of Xbox.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we dive into the financial landscape surrounding Microsoft. Jefferies has made a significant adjustment, lowering their price target on Microsoft shares down to $575 from $675, while maintaining a buy rating. This move signals some shifts in analyst sentiment and will break down what this means for the software giant's stock performance. Now, let's talk about the AI frontier and how it intersects with enterprise tools. M-Files is stepping in to make Microsoft Copilot more trustworthy by acting as the essential intelligence layer. They explain how their platform connects documents to context, ensuring Copilot operates on governed, reliable information, which is a game changer for businesses pushing AI into production. And finally, we look at the big picture with Microsoft's recent performance. We're examining the quarterly earnings report, where Microsoft reported $4.27 earnings per share, beating estimates, with revenue soaring to $82.89 billion. Plus, we'll check out the recent insider trading activity involving EVP Kathleen T. Hogan and Director John W. Stanton. Don't miss this full breakdown. Stay tuned. Xbox co-founder Seamus Blackley was recently invited to Microsoft headquarters by Asha Sharma, the current head of Xbox, marking a significant moment for the brand. Blackley, widely regarded as the father of Xbox for his pivotal role in launching the original console 25 years ago, has maintained a strong connection to the platform despite stepping away from direct involvement since 2002. The visit comes shortly after Blackley publicly voiced concerns about the potential sunsetting of the Xbox brand. During an interview preceding the invitation, Blackley offered strategic advice to Sharma, recommending she consult industry leaders like Reggie Fils-Aimé, Phil Harrison, Shuhei Yoshida, and Peter Moore to learn from their successes and failures in business. Sharma appears to have taken this advice to heart, demonstrated by inviting Blackley to Microsoft HQ and also recently engaging with industry veterans, such as former PlayStation boss Sean Layden, following his critique of Xbox Game Pass. Industry observers view this move as a strategic effort by Sharma to build broad knowledge within the gaming world. Some commentators suggest that Sharma's openness about her lack of deep industry knowledge, coupled with a willingness to learn from both successes and failures, is a positive leadership trait. However, skepticism remains regarding tangible, long-term changes to the Xbox ecosystem, with some questioning if structural decisions, such as multi-platform publishing, remain entrenched. Discussion around the future of Xbox continues, with speculation focusing on Project Helix, the integration of console modes for legacy games, and the enduring importance of exclusive content. While there are signs of renewed positivity surrounding the brand, analysts caution that the ultimate direction of Xbox will depend on navigating ongoing internal dynamics and strategic shifts within Microsoft. The recent release schedule and Game Pass updates continue to shape the current landscape for the platform. Investment bank Jefferies has revised its price target for Microsoft, lowering the forecast from $675 to $575, while maintaining its buy rating on the stock. This adjustment signals a recalibration of Jefferies' valuation expectations for the tech giant. The move suggests a more cautious outlook on near-term growth prospects or a reassessment of potential headwinds facing Microsoft. The decision comes at a time when investors are closely monitoring Microsoft's performance and future strategic direction. The analysis published by Market Screener, Com details the rationale behind the downward revision, providing investors with crucial insight into the bank's current assessment of the company's valuation trajectory. Institutional investor activity in Microsoft Corporation stock remains robust, with Oak Ridge Investments, LLC recently increasing its stake by 7.1% in the fourth quarter, acquiring 23,602 shares, and bringing its total holding to 353,786 shares, representing approximately 10.4% of its portfolio. This positions Microsoft as the second-largest holding for the firm, with the Microsoft position valued at $171.098 million at the quarter's close. Other institutional players are also active. WFA Asset Management Corp. Boosted its position by 27% in the first quarter, acquiring 216 shares. Ironwood Wealth Management, LLC, saw a minor increase of 0.3% in the second quarter, adding 38 shares. Discipline Wealth Solutions, LLC, demonstrated significant growth, increasing its stake by 410.4% in the third quarter, purchasing 2,138 shares. Wealth Group Limited and Eagle Capital Management, LLC, also recorded modest increases in the fourth quarter. Overall, institutional investors collectively hold 71.13% of Microsoft's stock. The stock's recent performance has been accompanied by varied analyst sentiment. Reports show mixed signals, with some firms like Daiwa Securities Group reducing their target price, while others, such as UBS Group, have reiterated a buy rating. J.P. Morgan Chase & Co. also adjusted its target price downward. Despite this, data from Channel YouTube Com indicates Microsoft currently holds an average rating of moderate buy, with an average target price of $556.15, supported by 38 buy ratings among analysts. Microsoft recently reported strong quarterly earnings on April 29th, posting $4.27 earnings per share, surpassing consensus estimates of $4.06, alongside revenue of $82.89 billion, an 18.3% year-over-year increase. The company also declared a quarterly dividend of 91 cents per share, set to be paid on June 11th. Key corporate movements include Executive Vice President Kathleen T. Hogan selling 12,321 shares in March, resulting in an 8.2% decrease in her ownership. Conversely, Director John W. Stanton purchased 5,000 shares in February, increasing his stake by 6.34%. Trading data shows Microsoft currently trading at $414.41, with a market capitalization of $3.08 trillion. The company maintains a healthy balance sheet with a debt-to-equity ratio of 0.08 and strong liquidity ratios. Analysts continue to monitor the company amidst its position as a global technology leader in areas spanning cloud infrastructure, productivity software like Microsoft 365, and enterprise applications. As organizations rapidly integrate artificial intelligence into live production environments, a significant hurdle emerges: operational friction stemming from fragmented, document-driven workflows. Without robust context, governance, and structure, documents can introduce risk instead of value, hindering the reliability of AI systems. M-Files, a context-first document management platform, is positioning itself as the solution by connecting documents to their business context through metadata, relationships, workflows, and permissions. This capability ensures that both users and AI can reliably locate and utilize the correct information. The platform establishes a natural pairing with Microsoft 365 Copilot, where M-Files acts as the intelligence layer. It ensures Copilot operates exclusively on trusted, governed information rather than disconnected files. Following a webinar detailing native access to M-Files within Microsoft 365, M-Files compiled responses to key questions from customers, partners, and IT leaders concerning governance, licensing, storage models, cloud versus on-premises deployments, and adoption strategies. Bringing structure to Copilot is central to mFile's approach. By enriching documents with metadata and relationships prior to AI interaction, mFiles uses automated workflows and lifecycle management to surface only appropriate documents. Built-in permissions enforce governance by design. Furthermore, users gain granular control by employing an include-exclude property to precisely flag which documents AI agents are permitted to reference, mitigating risks associated with outdated or unapproved materials. The native integration with Microsoft 365 Copilot is available exclusively through mFiles Cloud. Documents reside within the customer's existing Microsoft 365 tenant via Microsoft 365 storage, eliminating redundant storage costs. mFiles licensing focuses on governance, workflows, and contextual intelligence, separate from raw storage capacity. For on-premises deployments, mFiles ANO serves as the AI fabric, handling metadata extraction, classification, and enhanced search within the vault. However, the full native Copilot experience across Microsoft 365 necessitates a migration to the cloud. mFiles clarifies that ANO and Copilot are complementary, not competing. ANO's role is to structure and enrich documents, making enterprise information AI-ready through process automation. Copilot then operates at the user level, enabling summarization, reasoning, and natural language querying over that prepared information.